Welcome back to Investing Talk podcast. Today we're taking a close look at one of the key players in China's rapidly evolving new energy vehicle market, Li Auto.
That's right. We've gathered quite a stack of analysis reports, due diligence stocks, outlook summaries, all current as of, well, mid-May 2025. Our mission here is really to extract the most critical insights from these sources, help you understand where Li Auto stands right now, especially, as they approach a pretty major announcement.
Right. Think of this as your shortcut to getting well informed on Li Auto, based only on the sources you've shared with us. We'll cover, well, everything from their unique vehicle strategy to recent performance numbers, and, of course, the big financial questions looming this month.
We'll help you unpack what the numbers mean, try to connect the dots between their products and their market position, and highlight the key things you really need to watch.
Okay, let's get into it then. Who exactly is Li Auto in the Chinese NEV landscape, according to these sources? What kind of defines them?
Well, the sources identify them as a leading player, definitely specializing in premium smart electric vehicles. But what's interesting here is their primary focus. It's on family-oriented vehicles, and importantly, their emphasis on extended range electric vehicles, or EREVs, alongside, the pure battery electrics, the BEVs.
So not just pure electric. That distinction seems really important based on these sources. Why is that the key differentiator they highlight? Why ERVs?
It uh, it raises an important question about consumer needs, doesn't it? And maybe infrastructure. ERVs combine electric power with a gasoline range extender. What the sources suggest is this directly addresses range anxiety, which is a significant concern for many buyers, particularly maybe outside the biggest cities where charging isn't quite everywhere yet.
Oh, okay.
So it makes their vehicles a compelling option, especially for families who need that flexibility for longer trips or just reliable performance wherever they happen to go.
Got it. So it's about practicality, fitting into real-world needs right now. One source puts it nicely, like creating a practical mobile home, mentioning features like zero-gravity seats, accessibility modes. Our sources list their current lineup, the Mega MPV, then the L9, L8, L7, and L6 SUVs. Those features definitely sound like they're designed specifically for that family focus, making the car more than just transport.
Absolutely. Those design choices, the features they prioritize, they're clearly aligned with that family-centric strategy the reports emphasize. It does position them differently than some competitors who might be focused purely on, say, sporty BEVs or just basic transport.
All right, let's shift gears a bit. From what they are to how they've been performing recently, according to these sources, there are some interesting numbers highlighted for April 2025. Deliveries hit 33,939 vehicles.
That's the number. And what's significant about it, as the material points out, is the year-over-year growth. It's 31.6%.
Right.
That indicates pretty strong operational momentum and continued demand in the market for their vehicles.
And it doesn't seem like just a single month's performance, right? The sources state they've maintained leadership in large SUVs priced above RMB 200,000 for 3 consecutive quarters. Plus, cumulative deliveries surpassed 1.26 million units since inception as of the end of April. That cumulative total is pretty eye-popping.
That sustained leadership in a specific, often higher margin segment and reaching over a million vehicles delivered, that definitely underscores their established position and their rapid scale up in what's a very, very competitive market segment. It shows they aren't just a new entrant anymore. They've achieved significant volume.
The sources also mentioned recent events, like launching new models at Auto Shanghai 2025, the Mega Home Ultra variant, and a new L6. It sounds like the reception was positive, something like over 90% order intake favoring innovative trims like the living room mode seating. How does this new product activity feed into their overall performance picture leading up to now?
Well, this information suggests that their ongoing product innovation, particularly those features tailored to that mobile home concept we talked about, it's really resonating with customers, seems to be connecting. It looks like it's driving demand specifically for the newer, potentially higher value models and trims. It shows the strategy is, well, working with buyers.
Okay, here's where it gets really interesting and maybe a bit uncertain right now. The big financial news on the horizon is their Q1 2025 earnings report. Our sources confirm this is scheduled for May 29, 2025.
Oh, definitely. The Q1 report is highlighted as the key upcoming catalyst across the sources because, Well, as of mid-May when this info was gathered, detailed Q1 financial figures aren't available yet. However, we do have some context from previous periods that the reports lay out. It gives us a bit of a baseline.
Right. The sources state that for the full year 2024, revenue hit RMB 144.5 billion. That was a 16.6% increase from 2023. And Q4 2024 also saw steady revenue growth. They've shown consistent double-digit revenue growth over the past, 3-5 years, according to these analyses?
That historical data certainly confirms a strong top-line growth trajectory. Seems driven by those increasing deliveries we just discussed. Operating income in Q4 2024 also increased significantly year over year, which is generally a positive sign. Suggests maybe some improving operational efficiency.
So, historical revenue and operational income look strong, showing growth.
Mm-hmm.
But what about profitability and margins? Which, as these reports often mention, can be tricky for fast-growing EV companies. That seems to be where the uncertainty lies.
That is precisely the uncertainty highlighted by the sources. While historical revenue is strong and operating income improved, the reports point out that margin pressures are, well, pretty typical in this industry right now. They mention slightly compressed margins between FY 2023 and FY 2024, apparently due to higher operating expenses relative to gross profit declines. So costs rising maybe faster than the profit from sales. The May 29th report will provide the critical up-to-date figures. We're talking net income, the actual bottom line, profit EPS, earnings per share, detailed margins, how efficiently they're turning revenue into profit. Also debt levels and free cash flow, the cash generated from operations. These are the numbers investors will be watching really closely to see if the operational strength is actually translating into solid financial health.
Got it. Okay, so based on the information we have up to May 22nd, our sources list several strengths for Li Auto. They're a market leader in their specific segment in China. They have sustained sales growth, genuinely innovative product features focused on the family, and this extensive network. Roughly 500 retail stores across over 150 cities, plus service and charging infrastructure. That network size sounds like a major logistical advantage.
Those certainly appear as significant advantages in what is an incredibly crowded Chinese market. That extensive network, in particular, supports customer convenience and service nationwide, which definitely helps build confidence. And their proprietary range extender technology, the ERV VTech, is also noted as a competitive edge against pure BEV makers by offering that range flexibility we discussed earlier.
But then there are potential red flags mentioned too, right? Specifically tied to what we don't know yet from the Q1 results and just the broader market context.
Right. The pending Q1 financials are the primary near-term red flag highlighted in the reports. They could reveal significant profitability or margin pressures that maybe outweigh the revenue growth we've seen. Beyond that, the sources clearly state that competitive pressure is intense from both domestic rivals like NIO and XPeng and, of course, international manufacturers like Tesla. It's a tough field.
How does Li Auto stack up directly against peers like NIO and XPeng based on the comparisons provided in these sources? Is there a clear picture?
Well, the comparison indicates Li Auto has maintained solid revenue growth, comparable to NIO and XPeng, but their margins, as we discussed, have shown some recent compression compared to peers. It suggests they're still perhaps in an investment phase, despite their top-line strength. The reports kind of position them as a rapid growth challenger brand that has quickly gained significant market share in their chosen segments.
Okay, a challenger, but one with serious scale already.
Yeah.
Looking ahead then, what are the big things the sources say could impact Li Auto's trajectory? We know the Q1 earnings on May 29th is clearly a major catalyst.
That's correct. That earnings report will provide crucial financial visibility and likely set the near-term market sentiment. That's number one. Another potential catalyst highlighted is a planned dedicated launch event for new Li L series models, expected in the near future. That could further boost sales momentum, assuming it's successful.
And the risks, besides obviously the outcome of the Q1 report and the ongoing competition.
The sources point to broader industry risks as well. Things like regulatory changes in China regarding NEV subsidies or maybe emission standards. Those could significantly impact their cost structure, potentially. Intensifying competition could continue to pressure those margins we talked about. And, macroeconomic factors influencing consumer spending are always a consideration in the auto industry, especially for premium vehicles. Oh, and supply chain disruptions were also mentioned historically as a potential risk factor to keep in mind.
It really sounds like the next few weeks, centered around that May 29th earnings call, are going to be particularly telling for Li Auto. A lot hinges on that report.
Precisely. Market sentiment in the sources is described as, well, cautiously optimistic ahead of earnings. There's speculation on social media platforms, naturally, but investors are strongly advised to rely only on confirmed information directly from the company reports themselves. Filter out the noise.
So summing up our look into these sources on Li Auto as of mid-May 2025.
We see a company with strong operational performance. That's evidenced by robust delivery growth and clear leadership in key segments. They have innovative, family-focused products that definitely seem to resonate with buyers.
But the financial picture for the most recent quarter is still pending. That creates this short-term uncertainty around profitability and margins, which have shown some pressure historically based on the earlier data provided in the reports.
Which leads to the summary recommendation provided based only on the information available in these sources up through May 22nd. It's given as hold by, kind of sitting on the fence there.
And that split recommendation hinges entirely on what those upcoming Q1 results reveal, doesn't it? That seems to be the deciding factor.
It appears so. If the Q1 results show continued revenue acceleration and improving margins, plus stable competitive positioning relative to peers, well, that would support a more confident buy stance, according to the logic presented. On the other hand, if margins deteriorate significantly, or if guidance for the next quarter weakens due to pressure, the recommendation leans more towards a hold, at least until there's clearer visibility on their path to sustained profitability.
So it highlights the pivotal nature of this upcoming report.
Definitely. Investors need to monitor those earnings results very closely and, of course, consider their own risk tolerance for fast-growing companies operating in such a highly competitive environment.
This analysis of the sources on Li Auto gives us a snapshot, doesn't it? A company with strong operational momentum, real product innovation, but also one facing that universal challenge for growth companies, turning that top-line success and market position into consistent, sustainable profitability, especially in the market as, frankly, cutthroat as China's NEV space.
The May 29th earnings report is clearly the pivotal moment these sources point to. It's needed for gaining essential clarity on their recent financial health and their potential future trajectory.
It leaves us with a compelling question to consider, maybe for you listening. Can Li Auto's specific focus on family needs and their EREV technology provide a strong enough sustainable edge? Enough to allow them to improve margins even as competition from pure BEVs and maybe other EREV players intensifies. That's definitely something worth thinking about as we head into their earnings announcement.
Indeed. The sources provide the historical data and the current context, but that Q1 report will really write the next chapter for them, at least in the near term.
Absolutely. Well, if you found this exploration of the Li Auto sources helpful, please consider liking this discussion. Maybe leave a comment with your thoughts on the upcoming earnings. And definitely subscribe to the channel so you don't miss our next analysis. Thanks for tuning in.